The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How are you?
We're doing great, man.
I want to thank you for bringing this Nadex platform to our attention.
Oh, cool.
It's one of the most powerful things that I've seen.
Yeah, it is certainly a platform that not only is neat, but what's so sweet about it, folks, if you haven't tried it out yet, is that when you put your trade on, that is your stop. So what happens is this. Everyone's excuses all the time is that I moved my stop, I didn't put my stop. Well, that is your stop.
Yeah, exactly. I mean, it's perfect. You can set your trades and go do something else.
Now, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Nadex Bull Bear Binary Option with your hosts, Darrell Martin and Steve Rhodes. Thanks so much for joining us, folks. Darrell, how you doing today?
I'm doing awesome. How are you doing?
Doing just great. As we come into the opening segment of this show, we've got the Dow is up 4 points, S&P back 2, composite down about 9. About $1.70, Apple down $3, Google off $1.26 out here. Popping to the upside here, Norwegian Cruise Lines up 28%. Wonder what is behind that move out there. That just popped up on my screen out there.
Everybody wants to go cruising, man.
Oh, it's maybe their initial public offering. That's what it is. So you got that's what that one is about. But moving to the upside, you got Life Technologies. They're the leader in the clubhouse, up 9%, up $5 and change. Netflix right behind them, up $3 and change. You've got State Street up 273. OSI Systems up 257. Goldman Sachs having a good morning, up 240. Corp up about $2. Baidu up $1.37. Movado, I imagine that's the watchmaker group. They're up 5% here this morning, up $1.84. Chipotle. You got Chipotle? You must have Chipotles in
Oh my gosh, we got Chipotles. We got badass burritos. We got Free Birds. There's like 10 different burrito companies within like a mile. Yeah.
Now, have you been to Chipotle?
Oh yeah.
Oh, okay. All right. You like it?
They're good. There's some better ones,
right.
but they're good. Yeah.
You know, I had never.
I don't like the big burritos with all the rice.
I was actually the culprit that led to the sell-off in Chipotle. Because I couldn't understand how restaurant stock was priced the way that it was, and I finally broke down, Darrell, and went into one, and then came back on TFNN and said, I don't like it. I don't see it. I don't get it. I don't get where that stock is priced. And
I don't like the burritos. I'll get like the tacos because I don't like 5 pounds of rice. That's just a bit much for me.
Yeah, well, I even went back in there just as just as a second experience. I didn't have any better second experience than the first. But hey, folks, if you haven't had a chance to test drive the Nadex platform, do yourself a favor. On the right-hand side of the TFNN homepage, you'll see the banner out there. Click on that. It takes you about, a period of maybe 4 minutes or maybe not even that long to go ahead and get set up on the platform. Darrell also hosts a show each day, Monday through Friday, from 1 to 2 p.m., and we'll teach you obviously during this show here. We'll look for some trade setups, but he will teach you how to trade the Nadex platform out there. He's got a really great analyzer tool that also you want to be able to use. Just helps you with the being able to trade it, identify. It's all about time and helps you be able to narrow down the best trades that fit the particulars that you are looking for. And it is a great system because you can set it and forget it. And if there's any one thing that traders, investors, probably I think the number one error that a trader makes, and each of us have done this, is not properly set your stop. Well, with the Nadex platform, folks, once you place a trade, you're there. You've got everything in place. So you can, as Ron Popeil says, you can set it and forget it. And that is a beautiful thing. Let's take a look at some of the indexes out here. You can follow along with us on Tiger TV if you're listening on your mobile device or maybe listening on the radio. The archive of this show is on Channel 10, so you can always catch the archive of that, and you'll see our charts. You can always have the show also streaming live to you on your mobile devices, your smartphones as well. Just go to the homepage of TFNN.com after you've signed up for the Nadex platform. Click on the link that shows 3 phones, and you'll catch this show live. If we take a look at the NDX, that's trading down right now out at 27.38. If we take a look at yesterday's move in the market, yesterday's move was not able to get up above the January 2nd high. That high, 27.4650. Yesterday closing out at 27.4716. Okay, got over it by just a hair, but that area really acting as resistance and really set up by the high on January 3rd at the 27.5082 level. So you can see the NDX here. The NDX, the whole key, in my opinion, to this marketplace, going up or down, is now going to be the NDX. The NDX has been traveling, folks, as you can see, sideways ever since that January 2nd level. It has set up a great resistance level at the top and has created a great support level on the bottom. And the support level on the bottom is going to be really getting if it closes below the January 2nd open, which is the low of 27.1630, that will be your first signal. A real signal would actually be a close below the January 8th low of 27.0375. We'll take a look at the Qs. We'll switch right over to the ETF for the daily on the Qs out here. We'll see what the Qs did yesterday was they tested that same swing point on substantially lighter volume. That swing point on January 2nd was 70 million shares to the upside. Yesterday, testing it on less than half of the volume on a day when the market was breaking out above its highs. That's why if the Qs break above this area, and you're watching this on Tiger TV, the Qs will go ahead and complete the 0.786 Gartley sell pattern, and that would be at the 68.76 level. It's got great sacred geometry up there. Also, from a horizontal resistance standpoint, it would take you into the October 5th downdraft, the October 5th gap down, I should say, a slight gap down actually that occurred on the following session and we came back to trading on Monday on October 8th. That's an untested window out there, but it lines right up with a Gartley sell pattern. But first, the Qs would have to close above the 67.20 mark, and that's the real fuel in the motor here, and just simply they can't get that motor to start. So, Darrell, any trades that you see right here that we can show our listeners?
All right, well, I'm looking across the board right here. I'm just trying to find, a lot of the entries were like first thing in the morning off the news. I think we're going to see some God, honestly, I'm looking right now. I'm just waiting.
Let's take a look.
I'm
let's
waiting.
take a look.
So.
I love when we do the show on Fridays, you got options expiration, and
right.
And I'm just simply looking at the currency market. Typically, they on an intraday basis can either the futures market or the currency market, can offer great trade setups. So I'll go down and take a look at the euro US dollar currency pair, and what I've done, folks, is if you're watching us on Tiger TV, I've got us down on a 10-minute chart here, and we've got the euro trading out at 133.045. Now, what the euro has done, and there's a couple of things that we're looking at. One, I'm just looking at just simply retracements off of the last set of swing point lows. And that would take us back to about the 8 a.m. time frame on January 16th. So if we come down to the 8 a.m. time frame, January 16th, all the way up to the high that was put in at about 3 a.m. on the 18th, you'll see that the price has moved down into that 0.618 level, kind of in between the 618 and 786 area. So that's the first thing that we're looking at. You can see as price had moved down at about 4:30 this morning, got into that extreme oversold condition, worked its way off by just simply moving sideways to just slightly up with regard to bounce, probably a 0.382 retracement, and then resumed itself down. Have a nice wide-ranging bar on the 8 a.m. session, also bringing it back into the oversold territory, doing that at 8:10 this morning, and then giving us a bullish engulfing candle at 8:20. Wasn't confirmed, and now it looks like we're going to get another test of those lows here, and we're doing that with the market not moving down as far on the relative strength indicator. There's also an A to B equals CD pattern out here. The A to B equals CD starts at that high at 3 a.m. out at a price of 133.970. That's your A point. Your B point is going to be the 5:50 a.m. low of 133.22. That takes us up to the C point here, which came in at 7:50 this morning. Let's just go measure that retracement. Let's see what that B to C retracement was, because that is an important tool to give us some type of indication as to whether this should be more than a 1-to-1. Wasn't a total 0.618 retracement, but close enough. So we see the 1-to-1, A to B equals CD, and I would say the trade to start taking a look at, because it's setting up a Gartley buy pattern, would actually be on the euro. Darrell, and I would say that our targeted entry price right now,
I'm seeing very similar stuff. So
so might be around the 132.867 level. So we haven't gotten the signal here yet, folks. It almost gave us a signal. We were looking for it at 840, and I'm glad that it didn't give us a signal, because otherwise it'd be harder to actually try to identify and place the trade out here. But if we do get the signal, we'll go ahead and execute. But like any type of trading, what you're doing is you're doing your work first. So you're doing your work first to identify a trade that may be setting up, and then going to Darrell's platform to identify what trades might give us the best setup. So let's take a look at the possibility of this moving down into the 0.786 level. We're going to wait for the bulls to just simply show up. We're on a 10-minute chart, so the bulls will show up with candle formations for sure, and we'll be able to pull the trigger fast enough. So we're looking to enter maybe around the 132.867 level, and we'd be looking for a bounce up into about the 133.5. So 133.5 would be the where I would think we would see a bounce to, and we're not there yet with regard to a trade. We want to see the euro get a little bit lower, about 132.867. So why don't I hand it off to you? That way, Al can follow your charts as well, and let's see what how you would go ahead and use your system to be able to help us identify those trades.
All right, cool. Well, one thing I do see right here is we actually did just hit the -1 deviation level on the day.
Okay.
Which is about basically we expect that to encompass the market 70% of the time, meaning most of the time we hit a 1 and we bounce. So that's a perfect point for a potential bull entry.
And tell folks how they can see that and how they can get that, because it's great information that you have out there.
Basically, right inside the diagnostic membership that we have over on TFNN, we have the free 2-week membership you can get access to. And on it, every night at 7 o'clock, I'm posting the deviation levels, and they're based on the implied volatility. So this isn't like standard deviation, and this isn't ATR and pivot points and things like that.
Yes.
We're actually pulling the implied volatility out of 16 options. We're weighting them based on days till expiration, and then we're making our own volatility, our own VIX, if you will, okay? And then we're factoring that into a 1-day move formula. So basically the market is telling us how far the market's going to move. This isn't based on how it has moved. It's what the market consensus says in option pricing on how far the market will move on any given day.
Now today, for example, does it sort out? So you know what your deviation level, your standard deviation level, or your implied deviation levels are. What's the most stretched this morning?
The most stretched this morning is I'd have to pull each one of them up. But as far as
I didn't know if you could just go to what.
The euro dollar is actually at 76 pips. It's actually the one that's the widest as far as the currency pairs.
Yeah.
Is looking for the biggest move today.
Okay.
So, and it actually just hit it. So that's a perfect move on that.
Okay.
Right to the deviation level.
Okay. Cool.
But yeah, what we do is we post them in here every night at 7 o'clock, and it shows us right here. We have an expectation of a move down to 33.01 before it hits and bounces, and that's where we're at right now. Now, I always tighten my stops. I get confirmation, just like you were talking about, before I go the other direction. So when we come back, what I'll do is I'll show you how the scanner will help you easily find that buy.
Perfect.
As soon as you get that confirmation.
Perfect. Folks, we'll be right back. Darrell Martin, Steve Rhodes. We've got the Dow trading here up about 10 points. S&P's relatively flat. Be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin and Steve Rhodes. And as we take a look at MasterCard, MasterCard is the leader in the clubhouse on the way down, trading down $6.87 here, off about 1 3/10%. And why is that important? Well, MasterCard is strong. It's been one of the strongest stocks out here. As we take a look at MasterCard as it came off of the June 4th lows, trading out at the 390 level, up right now, trading at 596. Made a high out here on January 9th with 1.1 million shares. You got the first reversal candle what took place the following day. Dark cloud cover is what it was referred to. You really got confirmation of it with a bearish engulfing candle on the not the next trading session, but on January 14th, 991,000 shares. It closed a little window. Or it's closing it here right now today, that was established on January 8th. And there's another bearish candle. So right now we've got 3 bearish reversal candle signals in MasterCard, one of the strong stocks. If you take a look at the last 3 trading sessions, this sets up an evening star pattern. So what MasterCard has is very strong resistance at its highs right now at the January 10th level. Where would MasterCard likely fall to? Well, it'll come back and test the January 2nd level. Just as everything will out here, the January 2nd level, either the low at 501 or the high at 510. Now, There's usually natural harmonics that exist in the marketplace. It's just like Darrell using the implied volatility tool that he has created, the implied deviation, and so there are just natural harmonics that you can rely on a substantial portion of the time. If we take a look at retracements, recent retracements inside MasterCard, I'm just simply going to come from the one here in October 18th high, out at about the 485.65 level. I'm just going to draw a little box here down to the low of October 25th out at 447. So we see that is a retracement that exists out here. If I pull this back and take a look at another retracement area, I'd go right into the high of July 17th down to the low that was put in on July 24th. So you can see that too, and I didn't change the size of the box, that too being a natural harmonic area. Is it going to do the same dollar? No, that just changed the box. I didn't mean to do that. Boy, Darrell, you think I'd know how to use my tools out here. That's right.
They can throw you off at any given time.
I didn't change it. All right. So, no, I changed it altogether. How about that? It worked it worked when I did it earlier. Come on, baby. Okay, there we go. So we can see, folks, if we use that same tool here, what this actually says, based on the bearish patterns that we're looking at inside MasterCard, that what it should really do is come down and test the December 31st high out there at 491.92, trading at 516 right now. But you have gotten 3 bearish candle signals as it has come off of the highs. Volume today, 258,000 shares as it's moving into that gap up of 945,000 shares from January 3rd. So before we went to break, Darrell was showing us the scanner that he has, and we were taking a look at implied volatility, implied deviation levels out there, which identified the euro as a one deviation level. That's what his tool was showing. That showed last night at 7 o'clock. Is that right?
That's right.
And what we took a look at here on the short-term intraday chart was a pattern setting up that may be setting up. We're waiting for bullish confirmation here of a Gartley buy pattern in order to go ahead and take a trade using the Nadex platform where we can set it and forget it, which I got to love that. You just got to love that. So the trade setup...
It's starting to move off of it, too. We had that RSI diversion already take place, and I mean, there's a lot of things happening right now. So.
Absolutely. So it's, the trade setup, I don't know if you were able to, during the break, go identify a couple of trade possibilities. It is possible, just as your
really
system pointed out,
so
that we were at the one implied level, that this may be as far, it won't make it 1 to 1.272, won't get all the way down to the 786 retracement, forming a little bullish engulfing now. So by the 1040 session, we would know if we've got confirmation to go ahead and take this trade.
So, yeah, and it's ticking up a little bit right now. We'll see if it continues that. Hopefully it'll give us some time there. But looking at this right here, what we got... just to show people. Okay, so if you click on Spread Scanner, and then I'm just going to choose Euro Dollar. Okay. And then I'm going to say, okay, I want to buy. Pretty simple.
Yep.
Okay. And then I'll say, you know what? I want to at least be able to make $1 for every dollar I put at risk. And I can tighten that up, and maybe I want to be able to make a potential, $2 or $1.50 or whatever. And it'll instantly, what it does, it gets rid of all the spreads. See, before I did all this, look at this. This is what you're going to have to filter through inside the Nadex platform. And without all the math being done for you.
Oh, my
So by doing this right here, you go in, boom, buy, filter. It's instantly narrowed it down. And we can even take it down even tighter. So we got a few minutes here before we have that confirmation, so I'll do that right after this break.
That's great. We get back, folks, we're going to go take a look at setting up the trade for the euro using the Nadex platform. Darrell Martin, Steve Rhodes. Dow just turned negative by 66 cents. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin and Steve Rhodes. Thanks so much for joining us. We've got the Dow right now is down about a point. S&P's off 2. Pretty quiet market here for options expiration, Darrell.
I know. So it's been besides yesterday, okay, and basically that was the Fed injected a bunch of money yesterday, like right after the wretched Philly Fed Manufacturing Index report.
Uh-huh.
They did this release. I mean, it's like it's the worst report we've had in a long time. And I was like, oh my gosh, I can't believe that. I guess I can. It's the Fed. But they went in there and they injected all that money. That's what really pushed the final rally later in the day. I got the report up here, and but they went in and posted this at 9:55. Okay, I mean it was like instant. It was a 1-day instant repo purchase.
Oh, that's great.
Put in just a ton of money right there, like right at the last second to prop it up, because that was a horrible report that came out.
Yeah.
And on the Philly Fed, like if you go in and we pull that up, I mean, it was just massive. Well, I won't go into all of it, but
No,
anyways,
go
besides
ahead. So
that,
what did the report actually show? Because that's great.
yeah. Well, if you go over here and you look at the Philly Fed,
Yeah.
it's basically they're doing a survey in Philadelphia. The Federal Reserve does the survey, and it came in at negative 5.8. They had an expectation of 7.1. So that's a massive miss. I mean, that's even that's worse than a miss on this 10.7 in a sense because of just the gap between the two.
Yes.
And, I mean, it's just a horrible report, worse than last time, worse than last year, worse than expectations. The market starts to drop, okay? And they know this report's coming out. It's the Fed's report.
Yes.
And so conveniently, they decided to go ahead and drop a bunch of money. And this is a temporary open committee. The last time, I mean, they go in there, and the last time they've done this is a while back. And they're like, well, we reported that we were going to do something yesterday. They didn't say what they were going to do.
Yes.
They just put out a report of, hey, we're going to be able to do this, and we've done it in the past. And you can go back and you can actually look at it. But, I mean, they time these, and it's really interesting. And I learned this yesterday. I was in a trade, and I'm like, okay, I'm going to short. And then all of a sudden it pops up. I'm like, what is going on?
Yes.
And so one of the things I learned is I have this link right here. I'll send this over. I'll put it in the Tiger Den for us right now.
Oh, cool, cool.
But you can sign up for email alerts, Twitter, RSS on this.
Yes.
So I signed up for the email alert. I actually have it going to my cell phone. I put in my cell phone text alert email address.
Okay,
So
cool.
that way, if they release one of these little temporary open injections,
It was released at what time, you said?
9:55, 5 minutes before the Philly Fed report came out, they launched it.
Okay.
So knowing that this negative report's coming, basically they front run their report to make sure their report didn't cause the market to drop.
Yeah.
And but yeah, it was just a really I'm like, what in the world? Like, that is a horrible report. Why is this thing? I mean, because it was like fighting to try to go down, and there was all this negative volume, and it wouldn't move. And they injected all this capital just like instantly. And you can go back, and it's sort of interesting. You can actually go back and you can check and see the past reports and the effect they had. Now, most of them, look at this, are 3 days. Okay, 3 days, 4 days, 2 days, 3 days. I mean, all this right here. Okay, this 1 day instantly. So I mean, they went in. Turn of operation will be 5, but all the actual purchases were settled on the exact same day. There was no.
Well, then why would they say the term of operation is 5 days?
Well, term of operation is 5. I was highlighting the wrong one, but they have the auction method, multiple price, and they have the settlement 1 day forward. So on this, we're going to do settlement. I'm sorry, same day is what I was looking for. So auction method, multiple price, but settlement same day. If we go up here to the very top. Settlement same day. So you're looking for, like, are they doing it same day? Are they delaying it over multiple days?
Right.
Go back and find the ones that they did. Okay, this is just a fun, little thing if somebody wants to go out there and research it. But the settlement same day, instant 1 day auction. Now, again, it goes over 5 days, so it's money being like injected in.
Sure.
But they're going to finish the entire thing off. Okay. To like in that same day. It's just the operation is a 5 day operation. But it's really interesting. You go in and there's a lot behind it. But this is them going in and buying mortgage-backed securities, buying treasuries, buying a mixture of other agency bonds, and but they literally, I mean, just bam, out of nowhere, release it right before the report. So
that's cool. Now you got set up with a text message.
Exactly. So you can hop on there and you can have them. You can follow their Twitter. But I mean, the text message to me is the best thing because I actually you can subscribe to the text message for when they do this next.
Yeah. That's cool. That's cool.
So,
thanks for sharing that with all of our listeners out there. Hey, let's get back to that trade on the euro. What did you come up with? Because it looks like we're going to get confirmation here, and it's time to set it and forget it.
Okay. Well, on the buy side there, we have a couple different trades. It all depends on our risk reward that we're willing to take. Okay.
Okay.
Let me see. I'm going to back this down a little bit and see if we can.
Now the target from a ceiling standpoint would be just a normal bounce would be up in the 133.54 level. Well, actually, let me recalculate that. It should be a little bit less than that now, or higher than that. 133.580 level.
Okay, we're looking for that by 3 that fast, or I mean that slow, or we actually willing to take it for like a faster trade.
What's the risk reward? Because it's a 10-minute chart, it could be a faster trade.
Okay. Well, on ones that expire in 80 minutes here at noon. Okay. Mm-hmm. We can go in and we can do a buy for $10 risk, $87 profit.
Okay. And
that puts a buy in at 328.
Profit has to get to where?
328 would be where we're buying in at.
Okay.
So that's not now. There's one that has a higher risk that goes to the end of the day. Okay.
Yeah.
Which is still a lower risk than you'd be taking often whenever you're trading. but and less margin. But $93 risk, but it only had 33.17, and we're break even. Every dollar after that is profit. That can make 153. That's the closest low risk trade.
Yeah.
And that's one of the things we always, which is really helpful about this analyzer, because people go in and like I see this one right here. This one looks really cool. Okay, it's a $7 risk. It's a $240 reward. And if you're just trading on the Nadex platform, you're like, I'll take that one.
Right.
All right. But then I realized this thing's priced up at, let's see, 33.55, which is where we're expecting it to get to.
Exactly.
So you have to move 42 pips just to get your $7 back.
Yeah, exactly.
So you could easily, a lot of people hop in and they'll place those trades thinking on risk first because we're trained to do that as, traders.
Yeah, no, I think it's the pattern first, and then they find the proper risk that matches your pattern.
Exactly. So like you're looking at, break-even distance. Yeah. So break-even distance first, timed expiration probably second, or either, just depending upon, what you think as far as movement.
Yeah, I don't like to do all that work only to get to break even.
Oh, I know. How painful is that? And there's a lot of people I talk to that do this though because they just don't know.
Yeah.
And so the scanner keeps you away from that mess because you're like, wow, 43 pips to break even. To me, that's one of the most important numbers about trading a spread. And it's just because that's where the floor is. The floor is at 33.50. It's
right,
not that anybody's hosing you. It's just when this spread opened up last night at 6 o'clock, that's about where the market was at.
Right.
So it was right around 33.50. So they had a floor and a ceiling at that we can find one that's reverse right here. Here's a 33.50 down to 3100. So that one only has 3 pips or 1 pip to break even because it's below it. It's inside of it right now. So if you want to go short, well, that's a perfect trade. 4 pips to break even, $50 risk, $200 potential profit. But so that floor and ceiling one really isn't available for us. So really, we have a couple choices. Either one, we go for a shorter term spread.
Yeah.
Okay. That doesn't have to move too far. We're talking about $10 risk. If we're going for 33.50, then we're going to make about $23 on a $10 risk. That's still not bad. That's not horrible. That's 200% return.
Yeah.
So,
and that's the expiration of what, 3 o'clock?
That's an expiration at 12.
12, okay.
So now if we want to bump it out to 3, there's only really one good choice.
Yeah.
Okay, out of 26 spreads. This did a lot of work for us, okay?
It did. That's the great thing. That's the great thing about the analyzer.
Yeah, there's only one good choice, because we're not going to take this one that's 43 pips away. We're not going to take that one that's 15 pips away.
No.
So looking at break-even distance, there's only 2 clear choices. Either one, we take this one that's, a very small risk, very close. And then let's see here. The other one would be here's another choice too. This one's $8 risk, but it has to move 15 pips. But if we want to get till 3 o'clock, the only clear choice to take is the 32.25 to 34.75 spread. Okay, and that gives us the ability to go in and 3 pips away from break even. So we're going to maximize our profit, and $90 total risk on the trade. Okay, $9 margin. Now, just to put on a euro-dollar mini lot, which is what this is equal to, because it's $1 a pip. Okay.
Yes.
Would require about $220 in margin. So approximately. So that you'd have to put up if you're trading spot FX.
Yes. Right.
So currency conversion, all that fun stuff. So maybe like 230, 270. I don't know. I trade this so much now I don't even worry about it. So less money in margin, defined risk. Now here's a cool trick. So, and I know this is advanced, but I think the viewers will really be able to get something out of it, okay, is you can go in and you can straddle, okay,
to
lower your risk. And so by doing this, straddle, then what it does for you is like this trade right here, you can go in and you can find one that's going to have a really small risk, like right here. Like we could straddle it just to noon.
Yeah.
Okay. And what that does for us, we're actually selling the 33.20. See that right there?
Yeah.
Let me even zoom this in more. Okay? So what this does is if it goes down, this spread is going to make what this spread loses, which is pretty cool.
Yeah.
Okay? Meaning we don't really lose pretty much anything if it goes down. All right? And we have our risk is the difference between where we buy and sell. So you're talking...
Exactly. So we need to see some price.
8 pips. 8 pips is our total risk on this trade. Okay?
And those expire, that's a...
This one expires at 12. This little hedge we're putting on. Okay? So if it goes down, then it covers our risk. We only lose 8 pips. All right? So this is a way to get us closer, all right, with less risk. And I call this making your own box is what I do.
Yeah, exactly.
And now, as soon as it gets above 33.20, and then we're able to make money. So right here, like because this one stops losing, right? So since this spread stops losing,
and all you're giving up in this, all you're giving up is 8 ticks here.
8 ticks, yeah. So because what you're doing is you're basically making your own box. You put your box like right here.
Yeah.
It's like so if you could erase this because it doesn't really matter because this is neutral.
Right.
So this is like buying a box where the floor is 8 ticks above you. So I mean it's a very cool strategy. It makes it where if you can't find the right spread, then make your own spread.
Yeah,
and that would be hard to do. I mean, this is already hard to pick one on Nadex. I mean, just because all the math. But this right here, I mean, I'm not having to do any. I mean, just look at it. You can tell, okay, I make money when this one stops losing. So that's not far away. And the easy way on it is like, okay, 33.20, this one stops losing. Now, in this case
here, you'd have to be paying attention because you've got the 12 and the 3 p.m. expiration.
Right, so at 12, you may want to, tighten your stop or whatever. You could do something like that. Or you could put on another one.
Yeah.
So, because they're in 15 minutes, we're going to have another one that will go to 1 o'clock will pop up. Okay? So, there's constant, every single hour they release new spreads, which is great. But, I mean, no matter what, your risk will never exceed, $89 on the trade.
Mm-hmm.
So even if you, put it on and then walked away. So what you're doing right here is you're trying to go, hey, I expect a pop to happen in the next few minutes. Okay? And, in the next, 12. So the next hour and 15 minutes, I expect this pop to happen. If it hasn't happened, maybe it's probably not your trade. I mean, what would you do if you're sitting on this trade, you're waiting on it, and it's still the same price it is now in an hour and 15 minutes? Is it still the same trade for you with your analysis?
It really depends on a couple of things. Number one, it depends on what the candle confirmation is, and depends if we're down at the bottom of the oversold condition in the RSI. If we're midstream, then it's not worth it.
So if we're just right here and nothing's changed, the RSI is right in the middle.
Right here, we just don't have enough of our back up against the wall to take the trade. So it's just
right.
And because I'm looking at just simply an ultra short-term 10-minute chart, it's just not there just yet.
Okay. So now here's another thing too. So the set it and forget it idea. By the time we get to actually getting an RSI confirmation and price action, everything starts working in our favor, we're going to have this automatically will push every new spread directly into the scanner. Okay? So as soon as another one becomes available on Nadex, it'll pop in here. And so you may go, oh, I don't need it. Let's say in 12 minutes, new spreads come out.
Okay?
Because they come out every hour. So a new spread pops up, and you may go, oh, that one's better. And you click over, and now you have another hour to protect yourself. Okay? And no matter what, you're still protected. I mean, right now we're talking $75 risk on the trade. Okay? It's already went down $10 in risk. All right? The reason is because we're getting closer to the floor.
Absolutely, yes.
So the floor is 32.25 on this trade. So if we go over here, and I mean, we're, 32.25 is right down here, which actually is a 2 deviation. It'd be a second deviation level. So if it does keep moving, that's where we'd expect it to stop before it turns around. But, as we get closer to that floor, this trade actually is going to get cheaper and cheaper and cheaper. So,
do you find this trade setup here, as far as making your own box, is this easier to do in the currency market than it is in the futures market?
No, actually, I first figured it out in the futures market.
You did, okay.
Because the currency markets, they have so many, I mean, there's a lot of extra cool stuff they have, and they actually added it now to the indices, and they're working on adding it to some other ones. But I'll go in there, and, the market will move, and all of a sudden it's in the middle. And this is the issue. You go in, and we add 3 boxes, okay? And this is what it's like. It's sort of what we're facing right now.
Yeah, I think it's a great strategy.
If we go in here and let's see, if I put a box, they'll put a box say right here, okay, and then they'll put a box right below it, and then they'll put a box right in the middle, and all of a sudden it comes down. It comes up to this box. You're ready to buy, but there's no box.
Yes, right.
So if you combine 2 boxes together, exactly, then all of a sudden, if you're right here. Well, now,
folks, we'll be right back. Darrell Martin, Steve Rhodes. Dow's off 5, composites off 9. Be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin and Steve Rhodes. As we come back here, market's really pretty flat out here. Dow's off 5, composites down 11. Apple is trading down at the 499 level, looks to expire right around 500. We'll see if that's where it comes in at the 4 o'clock hour. Let me give you some of the parameters to be looking at today. The first one would be in the New York Stock Exchange. That is a key index for you to be paying attention to. Price is up over the 1.272 expansion. That's of your September 14th swing point high. Down to your November 16th swing point low. The 1.272 area is 86.97. If we don't get any bearish reversal signals here, says that the New York Stock Exchange could actually trade up to the 89.31 level. Today, the key thing to be watching, if you take a look at yesterday's close was 87.66.55. Today's open, 87.67.79. You opened up just slightly above it. You got really today, if you were to close the session right now, you'd have a dark cloud cover candle. That is a reversal signal. You're looking for something a little bit more than that, like a bearish engulfing. That means today on the New York Stock Exchange, if you get a close below 8735.31, you'll have a bearish engulfing candle. Has not produced a bearish engulfing candle on the New York Stock Exchange since December 3rd out there. So that is going to be important to watch. If we take a look at the S&P 500, we know the S&P 500 broke over resistance yesterday. No matter what the reasons were behind it, it broke over resistance, and resistance was that September 14th swing point. Was really tested just a little bit lower than that, more likely at the October 5th level, which was 1470.96. Today, if you get it closed back below inside the range, meaning back below 1474, today, you're back inside the lower part of the range. One interpretation is that would be a indication that you have a false break topside. With having a swing point so close to that 1474 level, and I'm referring to the swing point of January 15th, the low of that is 1463.76. You close below 1463.76. That then is absolutely back inside the lower part of the range. When a market moves up or down, one of the first things that you want to look for, folks, is you want to take a look for swing points. When you have a swing point like this that is really tucked so close to the top of the breakout area, that's really it's worth paying for more information, in my opinion. That's what you want to put the probabilities always on your side. It's worth giving up a few points to get. Don't worry about the bun. All you want to worry about is that big, thick, juicy steak. The steaks like they make in Dallas, Texas.
Yeah, we do. So, my grandfather, actually, I got my exposure to the futures markets going to cattle auctions with him.
Oh, did you really?
And him watching the futures prices, like up on the ticker, and doing the bidding and all that stuff. Oh, yeah. It was. I saw how they made the markets. I saw how they pushed the little guys out that were trying to screw them. Yeah. It was really interesting. Oh, yeah.
Was this in Fort Worth that you were going?
No, it's out in West Texas and East New Mexico.
Oh, yep. Okay.
And then my one of my uncles owns a dairy, and so of course that's the milk ag right there going on. And then he also another uncle owns a ranch.
Okay.
So we got I actually was feeding the feeder cattle, because you had to get them like where they could stand up to be officially feeder cattle, And then I actually spent a lot of time up on corn and wheat and tobacco farms. So we have some oil and all that stuff too. So it's like I had the whole commodity thing from like a child up. But,
that's
pretty cool.
What most people don't realize is how large of a cattle market Florida actually is.
Really? I didn't even know that.
Yeah, it is. Hey, folks, do yourself a favor. Thanks so much for being here, but tune in to Darrell at 1 o'clock today. Each and every day, he'll teach you how to trade the Nadex platform. Darrell, have a great weekend, and see you back on Tuesday. Stay tuned for Basil Chapman, folks. And Darrell follows Basil, David White from 2 to 3, Ken Shreve 3 to 4, and the Tom O'Brien Show from 4 to 6. Have a fantastic weekend. Look forward to seeing you next week, folks. Take care. Take care, Darrell.
You too, man.